Alright, hi guys, welcome back to PKFX YouTube trading channel. So this particular video today would be a quick video with regards to my entry that I just took, that I just actually entered for gold, XAUUSD. I entered for a gold buy. But before I explain on this particular entry, I just want to very quickly recap what happened over here in this trade. This was also another gold trade that I entered. And as you can see, the market upon entry actually rallied all the way pretty close to my take profit, but unfortunately the market literally stopped like about 1 pip right below my take profit level, and then the market literally just reversed. And this particular trade was a beautiful 1 to 2 risk to reward. Unfortunately, when the market was up here, I was pretty much sleeping, and by the time I woke up and I checked the charts, it was already dumping towards the downside. And if I go to the 4-hour candlestick pattern, we can see that when the market was actually dumping towards the downside, literally the lower time frames, 30 minutes, 1 hour, 2 hour, everything has already shifted into a sell. So at that point of time, the probability has already shifted, and it no longer made sense to me to continue to hold this particular trade, because the probability of me entering the trade at this point of time and the probability at this point of time when I was looking at the trade has already changed, right? So since the probability has shifted, it does not make sense to continue to hold the trade. Hence, I closed it out in a very small profit. Like I've already marked over here this particular red line, where exactly when I saw the charts and I was like, oh shit, I missed taking profits over here. And to be fair, I was actually aiming for the market to continue rallying all the way up to the round psychological number of 4,500, which is essentially the next resistance zone, this box that I've drawn over here. And to be fair, if the market was here and I actually looked at the market also, I most probably would have held, expecting for the market to continue to push towards the upside, right? So regardless of whether I saw it later on or if I did see it at that point of time, I wouldn't have closed this particular trade for a 1 to 2. So it made sense to me that, understanding what I would have done and where the market is at that point of time, and the right thing to do is to understand that, hey, the probability is no longer in my favor. Hence, we need to close this particular trade and redeploy the capital into a different trade, right? So that's when I closed it. I marked it over here. I closed out in a very small profits. And what happened thereafter was the market literally actually went all the way down. And instead of hitting my stop loss, I secured it with a small win. So for me, that is still a win. I prevented from losing the entire 1%, and I waited for a potential entry, a logical entry. And I understand that at that point of time, the 4-hour has pretty much shifted into a sell. And as we speak right now, this is the lower low and this is the lower high. So technically, the weekly is still bullish. If I go to the weekly, right, for this particular gold chart, we can see over here that the weekly is pretty much bullish, this huge strong breakout pattern. And then this week it tried to pump all the way up, but it retraced back to the zone of interest over here, which kind of allowed me for my next entry point. I'm expecting the market to continue to push at least up to this box over here, at least up to 4,500. That is my expectation, right? Not necessarily that's what the market has to do. The last thing that we know is that today is Friday, and the market can literally close this as an indecision doji candle, and the following week it could literally print a huge ass sell candle, right? So it can happen, understanding that it can happen, but the buyers on a weekly is still a buy. And if I look at the daily, is also a buy, though the last few days it has been buffering over here, showing some sort of resistance at the top here. But the way I see it is, it broke above this box, it came back to retest this box, it tried to break below, and now coming back again, and hopefully it closes above the box today, so that the following week it will be a continuation towards the upside. Now, do I expect the market to immediately pump to the upside? No, definitely not. Today is pretty much Friday already. Of course, anything can happen, but most probably this trade looks like if it doesn't hit my stop loss, it's going to probably carry on to the following week. I'm willing to hold. If I look at the 4-hour now back again, the way I see it is the market broke above this zone, came back and retested this zone. And one of the main reasons in why I entered is because the usual curvature pattern that I see, where after this candle printed, the 4-hour EMA is acting as a support, and the next 4-hour candle printed as an engulfing candle engulfed this particular candle, creating the curvature, having the 4-hour EMA also curving towards the upside. I've seen this kind of pattern where usually it plays along with the trend, showing that, hey, this is indeed acting as a support and the market is now going to push towards the upside. So that is what I see. Not necessarily that is what it has to happen. You see these structure points over here. It could always come back just to retest this structure point and eventually roll back down as well. So that is also possible, right? But I gotta play with what I keep seeing. I keep seeing this kind of curvature where it is also holding towards the support and the EMA is also coming down as a support. So most probably it's going to rally towards the upside. Now, if I go down to the lower time frame, to be fair, the 30 minutes, if the 30 minutes were to shift bullish, it has to break this structure point, right? This is technically still the lower low and this is the lower high. And as long as the candle has not closed above here for the 30 minutes is still a sell. But if I go to 1 hour, which was the reason why I entered, the second main reason, this is the lower low over here and this is the lower high. And you can clearly see I marked over here the 1 hour line over here, right? It actually broke above. Well, technically, slightly, very slightly, if I zoom in, you can see it broke above and closed above. Now, ideally, I could have waited for a pullback because usually after 1, 2, 3, 4, 5, 6, 7 back-to-back green candles, there should definitely be some sort of a pullback coming pretty soon. It could be this very candle itself. Looks like this was the candle and the next few candles can even be a pullback. Ideally, I could have waited for a pullback for a better entry, but my entry was saying that, hey, this is the shift of structure, but I'm entering based on this 4-hour engulfing over here with this pattern. So as long as this pattern is playing out, I should hit my take profit, right? The only concern here is because I'm only risking 1% of my account, my stop loss, though my stop loss is below the 4-hour lower low. So if I go back to the 4-hour, this is the 4-hour lower low, right? So though my stop loss is below the 4-hour lower low, right, it is still above the EMA, still above this wick over here. We can see there's two critical wick over here. Market could always come back and wick back again before pushing up. Ideally, my stop loss should have been something like this. But if I were to put it somewhere around here like this, right, then the risk to reward will not make sense to me. So I decided that I'm not going to risk more than 1% of my account. Therefore, I'm going to stick with it. Even if I go to the 1 hour, this right now, after this made the new higher high, this is the new higher low. And by right, the way of trading that I used to do, it should be below this lowest wick point, plus minus about 10 to 15 pips. So that should be around 58, 65, around something like this, right? Should be something like this. This is ideally the stop loss that I should place, whereby I know that if it hits, I'm completely wrong, right? But once again, I do not want to risk more than 1%. And I know that if it's going to hit over here, most likely it's going to continue rallying towards the downside because my stop loss is already covering the entire box and also the 4-hour lower low. So understanding where I'm placing the stop loss, and if I get hit on the stop loss, I'm losing that 1%. I'm willing to risk this with the belief that market is going to continue to rally towards the upside and most probably going to go and retest this 4,500-ish zone, this box over here. And if I'm wrong, right? So market is going to, break below this EMA. And if it does that, any sort of a pullback, we can look into a potential sell. So yeah, that's gold. That's the trade that I just entered. The other trade, I'm still holding AUDCHF. AUDCHF currently in small profits. So I see that it has created a new 4-hour higher high and a 4-hour higher low. Therefore, in order to make this trade risk-free, I move my stop loss to be over here, which is below the previous 4-hour lower high when it made the new higher high, 4-hour higher low. So I just placed it over here. And if I go back to the daily candlestick pattern, I can also see that my stop loss technically is below this huge weak point. Why? Because I know that this is the zone where the market can always come back and retest for the next bounce. I also know that the structure point is over here the market can always come back to retest. If I show it in the marker over here, it could always come back just to retest this structure point over here before continuing its uptrend. But my logic for this trade is, if it's already gonna come all the way down here and then just to continue the trade towards the upside, I might as well secure these profits, and whenever it comes down here, whether it comes down here or below here or below here, whenever I get the shift of structure back again, I can enter back again. I don't want the market to already rally all the way up here and then retrace all the way and clear off all my profits. I might as well secure my capital and deploy it for another trade, because anything can happen when the market comes back over here. So that's the logic behind that particular trade as well. Now obviously I do not expect this trade to play out anytime soon. This is probably going to be a trade that goes up to next week. If at all it doesn't pull back, I'm expecting for it to rally all the way up here. So I'm going to continue to hold this particular trade. The other trade, GBPCAD, that I took, it hit my stop loss. Obviously I thought I got wicked out, but to be fair, the market went all the way down anyway, so I'm probably wrong in terms of the direction as well. Even if I make this 1 to 2.5 into a 1 to 2 risk to reward, I would have still got wicked out. And even if I make it below the zone over here, below the area of interest, I would have still been wicked out. So I'm completely wrong over here, and the risk to reward will not make sense as well. So this is a valid loss and I'm okay with it, and I'll move on to the next trade. So that's pretty much it. That's the two trade I'm currently on. One is XAUUSD gold, where I'm expecting for a push to the upside, and AUDCHF, where I expect the market to keep pushing towards the upside. So that's pretty much it, guys. Thank you so much for your time, and have a good day. Take care. Thank you. Bye-bye.